Hey, what's up, everyone? My name is Ali. Welcome back to my world of stocks. Now, if you missed my last video, I mentioned that I'm bringing back my Ask Ali series where I respond to subscriber comments and questions, just a fun way of me connecting more with you guys and just really getting some interaction with you. Now, I do want to get through as many comments as possible, so these will just be very rapid fire, quick responses, only spending like a minute per question on average, hopefully. And those questions or comments can be about literally anything. It doesn't just have to be about stocks. You can ask me about myself, my YouTube journey, or anything else you'd like. Now, for this, I did also bring back the Ask Ali tab on our community Discord, and I'll be answering 100% of the comments posted there. So if you want to make sure that your question gets answered, that's really the best place for you to put it. However, I will also take comments from other areas like Patreon and YouTube, so feel free to drop comments here as well, and they might get chosen in the future. Okay, so with all of that said, let's go ahead and start things off now with some Discord comments first. And this one comes from ENR, who says, what was the worst investment you ever made and what did you learn from it? It can be stocks or anything. Well, I'll just go with stocks here to keep it simple, but for sure the worst stock that I ever purchased was a speculative online education company called 2U. Now, thankfully, I only owned a small amount of it because I really make it a rule to never go heavy into a stock that I do consider speculative. But the biggest lesson that I learned from that was to really pay closer attention to the management team and not underestimate how easily they can really destroy a company or send it downhill. Because I really focused more with that one on the high growth opportunities that I saw from online education. I've always felt like that's really the future of education. And I used to be a professor myself, so I really know that the future of education is going to be digital, in my opinion. But man, did management really drop the ball quarter after quarter. They seem to never really have clear direction with this company and in that market. They consistently flip-flopped a lot. And it just got to a point where I said, screw it, I'm getting out of this company, I'm getting out of this stock, which even though I sold for a loss, it was still the right move because I believe they eventually went bankrupt and then privatized. So really, that was also another lesson learned there, to not be afraid to sell for a loss if absolutely necessary. I mean, I know I always preach long-term investing, but if you have to get out, sometimes if you don't see a clear goal or mission from management, if you see that they're not sticking to it, if you feel like there's a clear pattern of mismanagement and you don't think they're going to turn things around in the future, it could be a good idea to just get out of that stock before things get worse. Next up, though, Jason asked, if you could only own one stock for the rest of your life, what would it be? Okay, so that's a fun question. I won't take it too literal here, but just kind of hypothetically, let's say that there's only one stock that I can buy right now. You would think that I would go with Google, since I've been saying a lot lately that that's really my number one favorite stock in the entire market. But that's kind of just speaking broadly overall when considering the valuation, today's price, their current performance, their size, and their future growth opportunities. However, if it's only one stock that I can own, I think I would actually want something that is extremely difficult to replicate because it's the only stock I can own. I really want to make sure there's a lot of safety with it. And while I do think that Google has that for sure, I just think that Amazon would be a little stronger in that area. Like when you think of Google, you mostly think of search and maybe digital advertising, but that's something that could, very far down the line be replicated fairly easily, in my opinion. Whereas with Amazon, their online shopping and cloud computing dominance, I think, would be much harder to challenge, especially online shopping, just because of the massive size and scale and infrastructure that you would need to build out just to challenge them. I mean, ordering, something on my phone, getting it delivered the same day many times, that's not an easy thing to just kind of buy your way into from nothing. You're going to have to build out massive infrastructure for it. So I'd probably take Amazon, because I can't really envision anyone being able to dethrone them at the moment, at least not here in the States. I know in Asia, there's Alibaba and JD.com. They're doing a lot, they have a lot of success over there, but there's also search engines out there too, like Baidu. So it's all kind of relative depending on how you look at it. But yeah, I think I would take Amazon. Okay, next up we have Michael, who says, hi, Ale, how many stocks do you think someone should hold in their long-term portfolio? what factors should I consider, like strategy, wealth, mindset, etc.? I hope that's not too big of a question. Not at all, Michael, and thank you for the question. I actually really like it. I think it's a good one. Now, to be honest, I kind of feel like you answered it sort of in a way, because those are absolutely all things to consider that you just mentioned. And the biggest, really, I would say, though, is what your risk tolerance is. Because the fewer stocks that you hold, the higher your risk will be. But the more diversified you are with more holdings, the safer you'll be, in my opinion. Now, I wish I could give you a fixed number to go with here in terms of how many stocks, but the truth is that you're probably just going to have to play around with it and see over time what you're comfortable with. Because another giant variable, I would say, is how many companies can you realistically keep track of? For me, it's a giant amount, but that's because I live and breathe stocks. It's literally my job. So it's easy for me to manage so many companies and diversify into so many stocks. It's what I do for work, and it's also like a big hobby of mine. I love doing it. So it's easy for me to keep track of them, but it might not be for you. You might have a completely, different job. You might have lots of other hobbies, other responsibilities. And if that's the case, maybe you only want to go with, like, I don't know, 5 to 10 core stocks, relatively safe ones that you understand their business. Maybe you use their products yourself. It might be a little easier for you to stay on top of them, and you won't get so easily overwhelmed from tracking them. But for me, again, it's way more than that, just because I love to buy stocks. I love to track companies. I love hunting for the best deals. And whenever I see a good deal, I got to pick it up, even if I already own other stocks. So I just end up with, a pretty large portfolio because of my investing style. But everyone is different, and that's totally fine too. Okay, one more here from the Ask Allah tab. We have ENR again asking, how have you come have you come across any stocks similar to DNP? This stock oscillates between $8 to $11 and gives 8% yield. One of my office mates literally owned this stock from last 20 to 30 years. Looks legit to me. Now, unfortunately, I'm not familiar with that stock. Thank you for the question, but yeah, I'm not familiar with that stock myself. I did do a quick Google search just so I could answer your question, though, and it looks like they're an investment company that invests in other stocks, particularly energy and telecom, where they get big dividend yields, because those type of companies usually pay out dividends. So they get big dividends from that, and they distribute it to shareholders in the form of a large dividend, which, like you said, currently does yield around 8%. That's very attractive. And the stock does hover around that $8 to $11 range, like you mentioned too. It is also negative, though, all time. So my guess is anyone buying this stock is mostly trying to swing trade within that range, or maybe what is more likely is they just kind of buy it whenever it's at the lowest areas of that range, and then they collect those big dividends long term, but they're not really investing in it too much for the actual price appreciation, right? And so I think that could be a good strategy, but I don't own this stock myself, but I can see why your friend does, and I wouldn't be against it, but it's not, it doesn't look like something to me that would be like a giant performer. So that's probably why it doesn't get talked about a lot, on YouTube and stuff. They usually talk about more hyped up stocks. This one maybe is a more kind of boring dividend income type of stock. All right, before we shift over to some YouTube comments, though, I do just want to quickly cover a couple more here from the other tabs. Discord calls these channels. I usually say tabs because for other people it might be easier to understand, but yeah, they call these other channels. And in the video suggestions channel, Michael asks if I can make a beginner-friendly video on how to use valuation metrics. And that's definitely coming, Michael, hopefully this week or next week. But, I'll definitely get that video out for you soon, hopefully. And then in the Is It a Buy channel, Maldang asked, given the current turmoil surrounding Tesla, do you think it's a long-term buying opportunity? It has recovered a bit the last few days, but still the outlook doesn't look that great for the near future. And some other members responded to that too. By the way, Michael even wondered if new conservative buyers will help offset the loss of liberal buyers, which is an interesting thought for sure. But I personally don't know. I think Tesla has amazing technologies and a lot of future potential, especially, in energy, autonomous driving, and even robotics. but the valuation has always been rich for Tesla. And at the moment, there is a very big backlash from, especially liberal consumers who used to be Tesla's biggest fan base. So going forward now, it's hard to know how much that will ultimately hurt Tesla's growth now that their biggest fan base is kind of turning on them. And growth is also very crucial for that rich valuation. So, it could hurt them. And I think I would say it's probably going to take a few quarters for us to really see how big of an impact this will ultimately be. So at the moment, I'm just kind of holding on to the shares that I already have. I don't really plan on either buying or selling until we get some more clarity on this whole situation. And then hopefully I can do like a deeper dive video for you guys when I have more information, when I have more of the facts that I can present to you. Which when I do though, I promise I'll try my best to stay politically neutral. I know that you guys don't come here for politics, so I try to keep that stuff out, and I just try to have an unbiased view from an investment perspective alone, and hopefully that's what I can do for you guys in a future video for Tesla. But just giving you a quick response here, it's hard to tell. There's like a fog of war here where it's kind of hard to tell how all of this is going to play out. And man, is it a wild situation. Some Teslas are getting like blown up or set on fire. It's crazy out there. But yeah, it's a very volatile situation. So we'll have to see how it plays out. But it's an interesting one for sure. Okay, we're running a little low on time here. Let's finish up with some YouTube comments. We'll go through these a little faster. Starting with several comments here actually mentioning bots in the comments section of my videos. A lot of people talking about bots, so many bot comments just going in there trying to sell cryptos and all these weird things. And this is something that I've been trying so hard to stop, guys, I promise you. And every time that I ban 20 different people, another 50 show up. And then when I ban them, another 100 show up. And then I ban a keyword and then they either change the word or make some new crypto coin that they can try to sell to everyone. So they always kind of try to find ways to get around me banning all of these robots, whatever they are. I don't even know what the heck they are, but it's super annoying. I know it's annoying. I'm frustrated too, guys. Trust me. And I really wish YouTube would figure out a way to stop them. But for now, all I can say is please, guys, please don't ever fall for such obvious scams. Telling you to buy a crypto or to message them on WhatsApp. Those are or even email. There's such obvious scams whenever they say things like that. And I even looked this up on Reddit because I was just curious, who could possibly be falling for these scams? In my opinion, they're the dumbest scams ever, but people fall for them. I'm not saying that in any kind of a mean way or anything, but unfortunately, a lot of people fall for them. I found on Reddit, there's actually people saying that they lost all their savings falling for these scams. And I'm just thinking to myself, how could anyone see 100 comments of these bots, saying the same exact thing to buy some AI cryptocurrency coin that literally nobody has ever heard of or talks about, and yet they think that that's a legit investment. I don't get it. It makes no sense to me, but I still feel for them, and I try to block these scams as much as I can. But you also just have to be careful yourself not to fall for them. Hopefully that's the case. And by the way, there's even scammers that will use my name or copy my picture. Those are a little more complex scams, but you have to be careful and ignore those too. But I'm trying to block as many as I can, like I said. But yeah, hopefully you guys just stay safe out there. Okay, let's go really rapid fire now. I took a little bit on that one. But we got Jay Matta who asked, what about Berkshire stock? For the community, this is for the community portfolio. And I think Berkshire is great for long-term stability, but it's a little too boring with not enough growth potential in my opinion. So it's not a stock that I've ever owned, but I know a lot of people like it. Jay also asked, what is your take on holding some gold in the portfolio? Now, I think gold and other types of investments are great, especially real estate for anyone that can afford that. But I don't really count those as things that are part of a stock portfolio. I would separate the two. But yeah, I don't have any issues with it. Faba asks, hey, Ale, I'm looking at some dividend-paying stocks myself, and I'm wondering what a payout ratio above 100% means. How is that even possible? Well, hi, Faba. And Yeah, this might depend on the metric that you're using, like what, whether it's net income or free cash flow or something else. But typically a payout ratio above like 70%, I would consider that high for the average stock out there. And yeah, over 100% is obviously, it's going to be pretty bad. It might just be a short-term issue though, like maybe they had a one-time earnings drop, but they're expected to recover. So because of that, they might not consider it a huge issue, and they might just decide to keep paying the dividend regardless because they know they'll be able to afford it later on. But if it's consistently higher, paying out more than the company earns, then yeah, that's a concern because it's probably signaling that the company is in decline and they'll either have to cut that dividend or issue new shares or take on debt just to be able to pay it. None of which is good for investors though. So definitely something to keep track of. Deborah says, great content. I look forward to your videos. Well, thank you, Deborah. That means a lot to me, and I really appreciate your support. Thailand Terry says, informative video, Alid. Thanks for your time and effort. Well, thank you, Terry. I know that you leave a lot of nice comments, and I really appreciate it. You mean a lot to me, and thank you. Thank you, my friend. Crypto Sci asks, when did Alid get married? Well, to be honest, my girl and I didn't really want a wedding. We just wanted to be married to each other and under the eyes of God. So I got us some rings. She got me this really cool Star Wars ring. It's like a Boba Fett ring. I'm a really big Boba Fett fan. And of course, I got her rings too. And we're just going to be doing a little ceremony on the beach with my godfather, who's also a pastor. But we're not really doing the whole big wedding thing because we feel that, that's very stressful. It can be a big waste of money too. So we'd rather just do something small for ourselves. But yeah, we just consider ourselves married now under the eyes of God. And we're very, extremely happy about that. So I love calling her my wife. And yeah, we couldn't be happier. All right, Jumpy Jeffrey has a big one here. This one is related to the community portfolio. He says, the problem with your portfolio, from my perspective, is its structure for how much money you have in it. You are over diversified. Diversification is for the rich. As you grow in wealth, diversification should increase, but because you are so diversified at these early stages, you are limiting your gains and might as well be in an ETF. It probably has about the same gains because your big gainers are such a low percentage and has a lower risk profile. You have the diversification of someone with over $1 million. Okay, well, thank you for the comment, Jeffrey. And this is probably a conversation that would be better served if we were like kind of going back and forth here. But I got to say, I do highly disagree with you. And the reason why is because I think diversification is great for anyone at any budget. And I think portfolio size is all relative, and the size of gains is subjective too. What's big to one person might be tiny to another. Plus, I feel that your argument, with all due respect, is not really using any facts. You're just kind of making a vague claim here about diversification only helping the rich because your gains would be theoretically bigger with fewer stocks. But the problem is that that's a hindsight argument because you're assuming that you know exactly which stocks will be the winners, which if that's the case, then you should be like a mega rich billionaire out there, sailing on your yacht because you would know how to perfectly pick stocks. However, that's obviously not the case for anyone in the world. And if I only held a couple of stocks, for example, like maybe you would want me to, and they happen to perform poorly, well, then I would only be left losing money. Whereas someone that's diversified could actually have a couple of bad performing stocks that they accidentally got wrong, which is a real thing. It can happen to anyone, but they would still be positive overall because of the other good stocks that they own that outperformed and made up for it. Hence the whole benefit of being diversified. Like in the community portfolio, we have stocks that we're negative on, but we also have stocks that we're positive on, and that helps us. The diversification keeps the risk low, which you also mentioned. But in other words, I would say that we're not fortune tellers, and especially anyone with a small portfolio that is just starting out, they're much more likely to make mistakes. So telling them to go all in with only a couple stocks, that's almost like gambling, and I think it's horrible advice in my opinion. I would instead focus on building out a well-diversified and reliably structured portfolio for the long term with a balance of some risk, but also some safety, some value, size, growth, dividends, and other things like that. But thanks for the comment, and I'm sorry, but I just disagree with your claims here. Also, ETFs, I think, are not the answer either, because there's no ETF that will hold exactly the same stocks that you want to be invested in or at the same ratios that you want. Not to mention that most ETFs out there can hold hundreds of different stocks that you never wanted to own to begin with. So I think the two are not comparable at all, and that's just another argument that I'm personally not a big fan of. But thank you again for your comment and your question there. Okay, last one here, guys. We'll just do one more to finish up the video. This one is from Gamble Boji. Says, excited for the dividend video, Ale. What do you think of COP for dividend stock? Thanks for the comment, Boji. I don't personally own any oil and gas stocks, but if I had to choose one, my favorite would be Chevron, because of how much they've invested into renewables for future growth while still generating, a lot of profits with a big dividend and a reasonable valuation. But that's just my opinion. All right, that's going to do it for this episode of Ask Ale. I hope you all enjoyed it. Again, make sure you leave your comments and questions down below, especially on Discord. Those will get answered. Those will have priority. But yeah, thanks again for all your support, my friends. It means a lot to me. Hope you're all doing well out there. And I will catch you in the next one. All right, take care, everybody. Bye-bye.